Coming up on Market to Market, warmer temperatures take hold across much of the country. A new wave of farmers join widespread European protests. Having that difficult talk with your elders. Farm transitions. And commodity market analysis with Ted Seifried next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, February 9th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The big matchup of the year is playing out in the desert, so too is the Super Bowl, as parts of the West have been slammed again with heavy rains. NOAA issued a La Nina watch this week, saying it could replace the El Nino pattern that we have been in for months. If past performances are any indication, this year's Atlantic hurricane season could be more active because of that change. What it meant this week was that more than 230 million Americans were in temperatures above normal. David Miller has our weather report.
Weeks of bitter cold weather with sub-zero temperatures have given way to another warm weather week with unseasonably high temperatures. Despite the swing, California is still suffering from its proximity to an atmospheric river that brought heavy rain and snow to the region.
This has truly been a historic storm for Los Angeles. We're talking about the third wettest two-day stretch since records started in the 1870s.
Nearly 500 mudslides have plagued the area so far this week. 9 lives were lost during the storms that precipitated the slides, with nearly half being killed by falling trees. Drivers faced tough road conditions in Big Bear, California this week, where a winter storm brought additional snow and gusty winds, making travel difficult. In the Midwest, record warm temperatures melted the piles of snow that appeared to be here for the long haul. In just a few days, the snow cover has disappeared from much of the country. Despite the break in the cold snap, winter is still officially here for another month and a half. More than 200 million people in the U.S. experienced above-average temperatures. The new UN chief of the World Meteorological Organization, Celeste Salo, says the rate of human-caused climate change is accelerating, and warmer weather in the Arctic has pushed polar vortexes outside of their traditional boundaries. Weather for the coming week is predicted to see the rain shut off on the coast and colder temperatures throughout the upper Midwest. For Market to Market, I'm David Miller.
Farmers in Spain, Italy, and Poland have joined in the ongoing protests against European Union farming policies. Recognized as one of the most powerful political groups in the EU, farmers are demanding measures to combat production cost hikes, reduced profits, and unfair competition from non-EU countries. Peter Tubbs recaps the week.
Farmer protests expanded across the European Union this week. Farmers in Bulgaria and Italy blocked traffic with their tractors as part of the expanding movement. The EU proposed rewriting its controversial plan to reduce pesticide use in response to the protests. The original plan had sought to reduce the use of pesticides in agriculture by 50% by 2030. The plan would cover farms in all 27 member states of the EU. Protesting farmers are also asking for protections from imports of cheaper agricultural goods, as well as shelter from higher input costs and support to protect them from the effects of a severe regional drought. Protesters in Bulgaria, the poorest country in the EU, argued that the war in Ukraine has depressed crop prices as Russia is selling grain below market rates to evade sanctions.
The
last 2 to 3 years have been a kind of hell for the Bulgarian farmer.
We
We are surviving on the edge. The small and medium-sized agricultural producers in Bulgaria will be bankrupt for up to 6 months if there is no change.
Elections for the EU Parliament are scheduled for June, and the concerns of farmers have taken center stage. The EU spends over 50 billion euros each year on agricultural programs and supports, and has proposed changes in agricultural practices in the union's quest to reduce carbon emissions by 2040. From Market to Market, I'm Peter Tubbs.
Nebraska is one of 6 states with an inheritance tax. A proposal was discussed this week to join Iowa in repealing the levy. Transitions from one generation to the next can be costly if pre-planning is left alone. The conversation can be awkward, heated, and could lead to hard feelings for years. Clint Fisher started in farm sales and has since founded Brain Trust Ag, helping assist in that communication between generations. Our chat was part of the MTOM podcast and is this week's cover story.
And so how do we have that conversation? Generally speaking, I like to have that younger generation approach the older generation with this kind of framework in mind. It's saying, especially if they have their own operation and they just don't know what's going to happen with the land base or with the equipment, the older generation just doesn't talk about it. Anytime it's brought up, it gets shot down.
What? Whoa. You're saying that maybe an old farmer might not talk about something important like that? That's breaking news, Clint. Let's sound the alarm. Sorry, keep going.
Once or twice I've seen it happen. But really, the approach is this. If I'm in that younger generation's shoes, I'm saying, I'm looking out for my family. I'm looking to protect what I've built, whether that's part of the operation or not. And part of being a good steward of my operation and part of being a good, business owner for my family is understanding and planning the future. And so, dad, uncle, whoever it is, I'm looking at planning out, 5, 10, 15, 20 years for my operation right now. And I like to say, say that you talk to me, say that you talk to a third party, right? That just generally neutralizes things. I was talking with a guy who works with this kind of thing, and he really encouraged me to see, part of my 5, 10, 20-year plan is I don't know, what place I have in your future plans. And so you just kind of bring it up as, hey, I'm looking out for my family. I need to plan this to be a good business person. And you approach it with humility and humble and with the approach that says, I'm not expecting anything. I'm not anticipating to receive anything, but to be, to have a well thought out plan, I just need to know whether there's anything on the table here or not, or how things are going to look. But really I think it's key to approach it that I'm not entitled to anything here, and I think that, if you have that attitude going into it, understanding that, hey, I'm looking out for my family here, then generally they're a little bit more willing to open up. Not all the time. And I've heard some people say, my dad said, well, you'll find out when I pass away, and if that's the case, then so be it. And then that's when I tell that younger generation, okay, then you can assume that you're getting nothing.
What's that conversation maybe we should be looking at if we're not directly tied to agriculture, or we are, and we need to have this conversation because we need to have it?
First and foremost, I would just strongly encourage the owner generation to be the ones to initiate it. That conversation goes something like, here's what our plan is, or we don't have a plan and we are working on putting a plan together. And getting everybody in that room, and it's saying, here's our plan. You may or may not agree with it. You don't have to like it. But ultimately, these are our assets that we're going to pass along in this manner. We have some, farm kids. We have some off-farm kids. Here's our current plan. This could change depending on, nursing home stays, if we buy a house in Arizona, things could change. But as of right now, here's what our plan is. Any questions? As simple as that. Now, that's assuming that there is, some type of a plan in place. If there is no plan in place, that's when I really encourage, reaching out to somebody like myself or, a good trusted state attorney. Even, some CPAs can give you some good, tax guidance and referrals. But whenever I work with a farm transition, there's a couple of key things that are just right off the bat. The first thing is taking a complete inventory. What do we own and how do we own it? How are things legally titled? Just because when we dig into that, we find out a lot of hidden, potential pitfalls that could happen with just that one exercise. So that's step number one. Step number two is we sit down separately. The owner generation, we're going to list out what are our goals and objectives. And then the successor generation, what are our goals and objectives? Separate rooms, not together, right? These are what you see happening in the future. Now you can take these two sheets of goals and objectives, put them together and see what things line up and what things don't line up. And oftentimes there's going to be a few that do line up, but there's a lot that don't. Now those are areas that we need to open up the communication on. And then that's when that family meeting needs to happen, and then we can collaborate, depending on the relationship dynamics. But that's the approach that goes into it, not saying, hey, I don't have a plan. What do you kids think should happen to this stuff? And then you have, husbands and wives and in-laws that all have opinions, and that's when things can get messy. And then it becomes I don't want to deal with this. It's uncomfortable. There's conflict surrounding this. I'm going to kick this can down the road until eventually there's no more road to kick the can down.
The full MTOM is available now.
Next, the market-to-market report.
USDA did little adjustment to the size of the Brazilian crop, leaving grain bulls sidelined. For the week, the nearby wheat contract lost 3 cents, while March corn cut 14 cents. Widespread rains in Argentina, along with wetter forecasts, took out much of the rally in the soy complex. The March contract declined a nickel, and March meal fell $10 per ton. March cotton expanded by $4.67 per hundredweight. Over in the dairy parlor, March Class 3 milk futures fell 38 cents. The livestock market was mixed. April cattle added $2.98, March feeders strengthened $2.35, and the April lean hog contract fell $2.68. In the currency markets, the U.S. dollar index increased by 15 ticks. March crude oil expanded by $4.42 per barrel. COMEX gold shed $15.50 per ounce, and the Goldman Sachs Commodity Index improved 9 points to settle at 558.30. Joining us now, regular market analyst Ted Seifert. Hi, Ted.
Hey, Paul.
Let's start with wheat.
Okay.
Because we like things that go sideways, right?
No.
No. But the thing with this market is it has been a global story.
Yeah.
Every time we think there's a U.S. development,
Sure.
it still becomes global. This
Always
week is the same.
Yeah.
Russia has, again, put more onto the market.
Right. Well, but wheat is always a global story because there's so many exporting countries. Wheat is grown everywhere, right? So wheat is very sensitive to the U.S. dollar, so there's that. But, I mean, if you look at how wheat has traded since the end of December, it's been absolutely sideways. At times, the range has been fairly wide, but we really keep gravitating back to the $6 level, and I'm talking, March Chicago wheat. But we've got our major moving averages, all the way from the 10, 20, 50, 100-day moving averages, all within about 10 cents of each other, just below 5 or just below 6. And the average price since the end of December has been about 601 1/4, and I feel like we trade that price a few times per week. At some point, the wheat will break out in one direction or the other. It's kind of strange for markets to go this sideways for this long, but the question is what and when, and I don't think any of us have the answer for that. I mean, we trade futures and not today's. If we knew the answer to that, we'd be doing it right now.
Let's go to corn. There was a story there was a WASDE report this week. Did you feel that corn was a headliner?
No.
Impacted? No. So what's the
Impacted.
impacted? So what's the story in corn this week?
Well, we were looking for the corn carryover to come down just ever so slightly. I think there's a lot of justification for corn exports to move a little bit higher. I would have liked to see the USDA bump it up 25 million bushels on exports just to say, hey, we're paying attention. We've got some good numbers. They didn't do that. They lowered FSI, feed, seed, industrial, by 10 million bushel. And it didn't come from ethanol, so I'm not exactly sure what that was all about. But it added 10 million bushels to a carryover that we were thinking, or the average trade guess was for a little bit of a smaller carryover, ended up being a little bit bigger. And I think the biggest takeaway for corn is that instead of trending towards a 2 billion or below carryover, we're trending closer and closer to 2.2 billion. We're moving the wrong direction, Paul. And that's the problem that corn has right here. We just can't find anything to get terribly excited about. Yes, it's great to see more exports, but until they really pile up, it's not enough to really put a big, significant dent in that big carryover we have right now.
I probably have 15 questions about corn from people watching at home and reading. I won't get to them all, but there's one thing that Naomi Bloom wrote this week, and she said that the funds are short, and people asking, are the commercials record long? And she did some homework and said, yes, they are. What does that tell you?
Well, so that tells me a number of things. One, it says that there's a lot of on-farm storage, right? Because if the commercials had it in their hands, they wouldn't have to be long. So that means that the U.S. producer is a very large, long position in corn, okay? So everybody talks about the funds being record short, which, by the way, I'm very curious to see what happens on the commitment to traders for the next 2 weeks, because these little inter-week rallies that we've had, even though they've fallen apart, I think the funds are very sneakily getting out of some of these short positions to take some near-term profit. That being said, the funds don't have to keep selling for the market to go down. There is another very large entity in the market that when they start selling, that could be our next big leg lower, and that is the producer. Unfortunately, Paul, we've seen time and time again, we get more cash movement, not with the carrot, i.e. selling into a rally, but with the stick, i.e. selling in, throwing the towel, panic selling on a bigger move lower. That, unfortunately, might be the next thing that happens to get that cash movement. Maybe it isn't. I'd love to see a profit-taking, short-covering rally coming from the funds. I would love for producers to take that as an opportunity to get some of those long positions, those natural long positions out of the market. But I don't know. The price action doesn't feel great.
But does the action from Brazil or South America change your tune at all, or influence, or maybe harden your opinion?
Look, the thing that could help corn, and I think the grain complex as a whole would be a big weather problem for that second season corn crop in Brazil. We know that Brazil has different soils, South America has different soils. They are still affected by weather, unlike if you look at our growing season last year, I'm going to say is probably the second worst growing season that we've had, or the worst growing season that we had since 2012, yet we ended up with a 177.3 national average yield, if you'll believe that. I don't know if we can get really excited about a weather issue during our growing season anymore, but we can get excited about something in South America because we saw how that impacted Argentina in a very negative way last year. So there is that possibility, but I hate the idea of hanging my marketing hopes on a possible weather problem for the second season corn crop in Brazil.
So, do you believe more the report out of South America about the size of their soybean crop, or the United States in the guess of the South American crop and how that influences the soybean trade?
Yeah, and it's not just CONAB, it's really all the private analysts and everything like that. I think what we're having here, Paul, is a problem with where the number started or should have started, right? Yeah, CONAB continues to lower their production, but they're not raising their beginning number. If you look at what's happened in the last 7 years, the USDA has had to go back and raise Brazilian production because their exports say their production was bigger. And last year they had to raise to this point, and they just did it an extra 2 million metric tons on this report. At this point, it's 4% above what they thought last year's production was. So I think what's going on with the USDA is they're looking at their 163, which was their original projection for Brazil, and saying that might have been about 4% too small. So if we add 4% to that, that brings us to a 169.5. So to go from 169.5 down to a 156, that's a 13.5 million metric ton reduction. That's 8% of their overall crop. That makes sense. So what I feel like is happening is the USDA getting ahead of not wanting to have to revise this crop higher, and therefore it's allowing them or justifying them for not lowering it as much as how everybody really feels like it should be. And by the way, if you lower it 10%, that takes us down to about a 153 million metric tons. That's still not a number that I think gets us really excited. And Paul, it's not us that need to get excited. The way we know if there's a problem with Brazil, the way we know that if global ending stocks in soybeans are going to get tight, and therefore our domestic ending stocks are going to get tight, is if China comes in and starts buying aggressively. We've seen the opposite of that. The last 3 weeks export sales for soybeans have been very poor. At a time of year they should be really, really good. That is a problem. We're seeing more switches out of unknown destinations to their actual destinations, which by the way means that we're going to see some big export inspections numbers here over the next couple weeks. But the sales are lacking at a time where we really need them. And that's why the USDA raised ending stocks, but lowered our exports 35 million bushels, even with problems in Brazil. That's a problem.
Because I think what you're saying is if USDA doesn't see China buying from Brazil, they're not going to buy from the U.S., therefore reduce our exports? Is that what you're kind of saying?
If China thinks there's a problem with Brazil, they would be aggressively buying. Well, it says one of two things. It either says that China doesn't believe that there's a problem with Brazil and they're more along the lines of what the USDA's production number is, or they don't have the demand, or a combination of those two things. And either way, if they're not buying from us, they don't have a sense of urgency to come in. They don't worry about that Brazil crop. There's no reason to say, oh, prices have to go sharply higher because we're not selling the soybeans, Paul.
You want to get political and say what would a tariff do to change that story?
It can't be good, right? I mean, what you're saying is we're threatening to go back into trade war all over again, right? I mean, like we've never really relaxed the tariffs that we already have on, but you increase those dramatically. China's already threatened to reverse the course of the good measures that they've tried to set forth. They were here in Des Moines last year for the first time since 2017. That's not going to happen again, Paul. We're not going to see the 10 million metric ton purchases again. That'll really hurt us.
If that happens. Yeah, I get you. Okay, I need to move to livestock because that was some positive news out of WASDE for the cattle market.
Sure.
Right? Do you agree?
Absolutely. I really didn't understand the slide that we saw in cattle, but especially feeder cattle from September into the first week, December 6th, I think was the low. We really overshot the mark to the downside. And that is a very good example of how managed money can really affect markets, especially thinner traded markets like the livestock complex. We really overran what I would consider fair value. Now, we've had a very significant bounce back. We've had some good data. The stock market indices continue to march higher. We got to feel really good about domestic consumer demand. Our export demand's actually been pretty all right. And I mean, everybody I talk to is just saying the animals aren't out there. You know, feeder cattle are just so hard to find. So this makes more sense. You know, basically what's happened since the middle of December to now makes a lot more sense. Now the question is, since we've had a very significant bounce, really we're talking about a 66% retracement in Fibonacci off the lows. Where do we go from here? And the volatility that we've seen in the last couple of days, the fact that we weren't able to hold on to strength on Friday, I'm a little worried that we get a bit of a correction. But longer term, I'm still really rather friendly on the cattle complex as a whole, as long as our domestic economy stays strong.
Oh, that's the cattle side, but the feeder side is way more tied to it than it ever used to be, it seems, here in this rally up. So what do you see on the feeder side?
I mean, look, contract lows and contract lows on corn, you know, day after day with improving pasture conditions. These are all really good things, right? And that is a friendly thing for feeder cattle. Look, the feeder cattle market is trying to serve a purpose, and it wants more animals, right? And I think it really will continue to have more upside potential until it gets what it wants. And you've got cheaper feedstocks, you've got other options as well. So I think that happens over time, but we're not there yet, Paul.
Best 30 seconds on hogs this week. What's going on?
You know, we were really, really down and out on hogs going into the end of the calendar year and into the first couple days of trading this year. We were very worried about the California effect. We've since kind of moved on from that and realized that, hey, life goes on. And while I'm not super bullish on hog prices going forward, I think that we've got a nice bottom there. We've really had a nice bounce off the lows. We do have a lot of up and down days here, so we might see some topping action here in the near term. But I'm not expecting a big flush out in the hogs. I think we've gotten past that point now, Paul.
Yeah, and the chart is, again, heavily volatile and hard to keep up with. All right, Ted, I appreciate your time. Thank you so much. Good to see you.
Always a pleasure, Paul. Thanks for having me.
All right, Ted Seifert, everyone. We'll be back with Market Plus in a little bit, but I do need Ted to hold on because we are going to pause in our analysis here and then continue our discussion and answer your questions in our Market Plus segment. You can find both analysis and plus there on our website of markettomarket.org. One thing before we go. Agriculture lost a great champion this week. Bill Northey served as a Deputy Secretary of USDA under Sonny Perdue. Prior to that, he was elected as Iowa's Secretary of Agriculture twice and served for 8 years. Bill Northey was 64 years old.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.